Hello everyone, this is Marshall Gittler, Head of Investment Research here at FXPRIMUS, bringing you the day's schedule events for Friday, April 15th. There are no major European indicators out today. The market will therefore have to wait until North America wakes up before getting any market-affecting data. At the beginning of the North American day, Canada announces its manufacturing sales for February. Sales are expected to have declined from January's unsustainably high level. Ordinarily, that might be negative for the Canadian dollar, but in light of the Bank of Canada's statement Wednesday that first quarter growth was, quote, unexpectedly strong, unquote, the market may ignore any weakness. At the same time, the U.S. announces the Empire State Manufacturing Index for April. The index finally made it into positive territory in March for the first time since July last year. The market is expecting it to continue moving upward, which would be good news for the U.S. economy and positive for the dollar. U.S. industrial production and capacity utilization for March comes out 45 minutes later. It's expected to have declined slightly, which would be no surprise. In any event, these two don't seem to have a big impact on the market. On the other hand, with the stock market up for the year and employment rising steadily, the provisional University of Michigan Consumer Sentiment Index for April is expected to improve a bit, which could boost the dollar. Consumer confidence seems to be doing better than business confidence. The big event coming up is the meeting between many, but not all, OPEC members and a few non-OPEC members, in effect Russia, to agree on a production freeze. This is a very complicated subject, so I'll just sum up my view. I think this is just public relations. I think the group is just trying to manage market expectations in order to talk up oil prices. First, most of the attendees seem to have ramped up oil production as high as they possibly can ahead of the meeting. So freezing output at these levels wouldn't reduce the oversupply of oil at all. Secondly, it looks like Iran and Libya won't go along. And if they don't, then the supply of oil will increase anyway. And furthermore, even if they do reach an agreement, how will they enforce it? Given the huge recovery in oil prices over the last 2 months in anticipation of this meeting, up some 60% from their lows in February, I expect a buy the rumor, sell the fact response and for oil to fall afterwards. That would affect the commodity currencies as well, especially the Canadian dollar. It could also have a risk-off effect that would boost the yen. Finally, on Sunday night or Monday morning New Zealand time, we get the New Zealand CPI. That's expected to have accelerated. The market is currently pricing in a 43% chance of a rate cut at the RBNZ meeting on April 28th, but an acceleration in inflation could persuade some investors to push out that forecast, which would be positive for the New Zealand dollar. This is Marshall Gittler, Head of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.